Hello guys, good morning. Today is Saturday, September 24th. I'm gonna be doing a little bit of a week resume, talking about this week's trades and everything that is worth mentioning. We're gonna begin with the week's forecast, as this week was pretty precise what I wanted to see and what we actually got. So the week began on here. So the 18th of September. And if we go to this week's forecast was, to go higher to then continue lower. You can read that. I mean, I did send it through Telegram. Although I don't think we met the 50%. No, probably not. No, we didn't get to the 50. We did get down to this. Oh no, we didn't. I thought we had gotten down to this though. So thing is that I was expecting price to go a bit higher to then continue lower, right? So we had that power of 3 concept. Price first going higher, making retail traders believe that the week is going to be bullish, when it just took buy side liquidity and starts to drop aggressively lower, right? It was a pretty clear analysis, and as you can see, it's quite bearish. Wasn't expecting much of a retracement, but as you can see, we did get one pretty good retracement on this, right? Even got to the, which we did discuss that week. We got to the weekly order block, weekly fair value gap, daily order block, good Fibonacci. So we had pretty much everything that we need on our favor, right? So yeah, it was expected for price to go lower. Now there is something that is worth mentioning. When you have a week like this, when price just dropping lower without really retracing much, we might get something like this. If we look into the 4 hour, you see how we had this huge impulse probably throughout an entire week. Yeah, an entire week and maybe a little bit more. Then we have a little bit of a range, aggression, well, not aggression, but retracement, aggression, a little bit of a range for a couple of days, continuation, and so on and so forth, right? Same with this, aggression, consolidation. Here, aggression, consolidation, continuation, reversal, consolidation, aggression, consolidation, aggression, right? So we can understand that price is potentially going to range, or at least consolidate or retrace in the next week or the next couple of days. So we do have to keep in mind that we might get some range of price action for next week, but I'll put that on the week's forecast. So this week was really good. Really good. We had a pretty clean price action, pretty clean couple of trades, and we're going to be looking at those day by day, because can I configure this so it just shows me? So we'll do 1, 2, 3, 4, 5. So this is Monday, right? Yeah, this is Monday. We'll begin from here. Let's go down to lower time first. So Monday was a good day. I did manage to grab a sell that worked out for a bit, but wasn't as interesting as the buy that we later got. So this is the price action that we encountered. What are we expecting for the beginning of the week? We likely wanted to see price going higher to, again, cause that power of 3 concept. But as it is something that we just think it's possible due to what we have analyzed in the weekly chart, is not something that has to happen necessarily, right? So we do have to keep in mind that, and at this point we don't know if price is going to go lower, we don't know if price is going to go higher. But here's the thing, price went aggressively higher, taking a lot of buy side liquidity. If we look to the left, we have multiple highs that price took, and of course this little bit of a range here to the left, right, that also has a couple of equal highs. Price took all of that, and then we see a little bit of an aggression lower, retracement, aggression lower. We have the first fair value gap through the kill zone, and then we get the second, although price does go through it quite aggressively, and the open happens here, and as you can see, it starts going aggressively higher, taking a high, which is buy side liquidity. So it takes buy side liquidity. We have the power of 3 concept as well, as price takes buy side, manipulates the market, making retail traders believe that the session could be bullish, takes buy side liquidity, and then drops aggressively, causing market shift. So at that point we have let me actually grab the this. So we have 1 and 2, don't we? Yeah, 1 and 2, and now we would need price to drop. Sorry, not to drop, to trade back into the fair value gaps, right? And basically give us the lower time frame opportunities. We'll look into the lower time frames opportunities in just a second. Now we have the sell side liquidity here. So you can see price goes aggressively, takes that sell side liquidity. What do we have here? This is a market shift. So what do we have? Run and stops. Number 1, 5 minute, 15 minute, well, 5 minute in this case. Aggression, displacement, and market shift. Fair value gap, price trace into it. And then we also look for the lower time frame entries, right? Just like that. Now, as an example, if we have a bias and we are expecting price to go higher, as an example, we would have not focused on the sells, and we would have focused on, as an example, in this case, this buy, this fair value gap on the 5 minute. When you don't have a clear bias, which, I mean, most of the times early in the week, we never really know. But as an example, after Tuesday's price action, which was this huge drop through London, then New York, and then we see this London on Wednesday. At that point, and also the fact that we had taken not previous week's high, but Friday's high, I think it was. Yeah, Friday's high. So you can see it's Friday's high. We had taken a lot of buy-side liquidity, so we can understand why price could continue to go lower after such a market like that, right? So 1 minute, this is the fair value gap going lower. This is the buy-side liquidity. This is the market protraction, power of 3 concept. As you can see, we also have a lower time frame entry in this, market shift on this low, fair value gap on the 1 minute, potential entry targeting this low, definitely get it, but I don't trade like that. So 5 minute fair value gap created on, I don't know which high, but basically maybe this high, and this is the 5 minute candle. I don't know, don't care. Price trace into it, a little bit of a range, aggression lower, fair value gap, and I think that was my entry. I don't really remember, if I can be honest. But I think this was my entry, as we have price going higher. It takes a bit of buy-side liquidity, but it does leave buy-side liquidity behind as well. So I did mention that I didn't like the fact that we had so many tiny equal highs in the 1 minute that price could easily just reach and take. So took the entry anyways, and what I did was I needed to not needed it specifically, but wanted to close at a 2.5% to recover from a couple of losses I had taken on previous week, if I remember correctly, and closed it around here, right? 2.5%, pretty lovely. And then price actually changes the direction, right? After taking this one, I was done for the day, right? Left the house. And as you can see, this is 10 New York. And price does mitigate the 5 minute, the bullish 5 minute fair value gap. And we get a little bit of a range, run and sell side liquidity. Aggression, is there a fair value gap? There isn't, so we avoided a loss on that. Aggression lower, aggression higher, market shift for sure. We have run and sell side liquidity. And what do we have in here? Fair value gap. This could have been a loss, right? Where we have every single step that we look for, and it would have just failed, right? There's nothing that we can do. As an example, in my opinion, this is a really good trade that is just completely failed. Now, we then get this, which was the buy I was talking about, which we do get. And the only problem that I saw with this one is that we don't actually have a market shift, right? So that would have complicated things a lot, clearly, because we would have not been able to actually do anything with this, because we're waiting for the market shift. The market shift doesn't happen, so what do, right? We're waiting for that to happen, and the fair value gap is mitigated on this. And as you can see, price flies pretty high up. And as an example, if we would have taken this, that would have been a lovely 48 ticks as the stop loss, and going a list up to this high. That's 3.87. Maybe risk it a bit more to get the 4R, meaning that we could have taken 2.5R on this one, 4R on that one, 6.5R for a day, right? This is the only clear trade that I liked on the day. I didn't really like this one that much because it is a run buy side liquidity and all you want, but it's pretty messy price action, right? So you can see just from here, or even from the 5 minute, it is a little bit of a mess to actually understand what's going on the price, right? You can see the runs on the highs and everything, the fair value gaps and all you want, but you can see how price is just going slowly down when we should see aggression like this, right? aggression, comes back to fair value gap or the block, whatever it is, continues going higher, retraces, and so on and so forth. If we wanted to be aggressive, and I really thought that the trend through Monday or through the beginning of the week was going to be bullish and go at least above Friday's high, this could have been a really good target and would have been hit through basically Asian session, right? And also this is another really good indication for price to potentially go lower for the week. As you can see, it just aggressively goes higher, breaks every single high that we have close to the left, and then immediately changes direction. There's a market shift down there or here if we want to be aggressive. A little bit of a move lower slowly, aggression higher, takes bite-side liquidity through London kill zone. London kill zone reaches up, takes bite-side liquidity, a little bit of a range, aggression lower. There's a tiny 5-minute fair value gap here, which means that we could have looked for lower time frame opportunities when price retraces. Okay, this is the fair value gap I was discussing, something like that. Yeah, between this candle's low and this candle's high. Trace back into it, and not probably, but we might have something in there. What do we have later? So why could we expected the day to be bearish? In my opinion, we have on Tuesday, right? We have multiple reasons. First of all, yesterday's price action was pretty bullish, pretty aggressive, and took Friday's high. We were expecting price to go first higher to then go lower. So it went higher, took a lot of buy-side liquidity, and look at how it immediately starts basically changing the direction. As you can see, what do we have? Impulse slowly goes, builds some buy side, takes the buy side, ranges a little bit, aggression lower, ranges, aggression lower, and so on and so forth. You can see how the bearish price action is going to be going pretty aggressively, while the bullish price action not so much. But also we have a lot of buy side liquidity being taken. We have all of these highs, we have all of these highs. You can see how market shift, fair value gap works. Little bit of buy-side liquidity taken, aggression, range, buy-side liquidity taken, continuation, and so on and so forth, right? You see buy-side liquidity being taken and price just continuing aggressively lower. So we have an entry, not an entry, but basically run on buy-side, aggression lower, potential entries in here. Buy-side, run on buy-side, aggression lower, potential entries in fair value gaps, and so on and so forth. And when we get to 8:30, this is where we are. We have two problems with being this low. We need price to retrace, right? Which means that either it does it fast or we're just not going to be able to do much with it, right? And as you can see, it starts here, it goes a bit lower, goes a bit higher. I was interested in looking for sells in here as it went above these highs, and if I remember correctly, mitigated a 15-minute fair value gap. But again, we are literally on discount. Right now we're on discount, so we can't be selling. There's nothing that we can do on here, so we just avoid this, right? We avoid this. Could have we forced, not really forced, but looked for a buy to try and get onto that retracement? Yeah, we definitely could have. And look at what we have taken through pre-New York, right? Not pre-New York, but through phase 1. We've taken a lot of sell side liquidity, and price reacts like this. Little bit of a change in direction, and I did see this as a market shift as well, but we never really got a fair value gap to look for entries in here or in here, right? So for me, there wasn't much to do on this day. And then we get this fair value gap, which price does trade into, and it either didn't give a lower time frame entry, or I was like, no, not gonna take that, and potentially just left for the day, right? Yeah, no, it's just no mitigation. As you can see, this is the 5-minute low, the 5-minute fair value gap low. Sorry, well, yeah, the high actually. Price trace into that, aggressively goes higher. This could have been one fair value gap, this could have been the other, and actually we do get a trigger on the second fair value gap, which is that one, but it happens pretty late, so yeah. And I would have not allowed this to happen, honestly, so yeah. Lovely trade, but as you can see, what was that? Actually just a retracement, right? We would have not gone for this as a potential reversal or anything like that on a day that is clearly bullish, bearish. So nothing for me to do, just a day that we didn't get the steps. If we look at the steps again, or the steps, I don't like calling them steps, but the steps. Basically, we never really got that, right? We do have the run sell side to the left, but when the market shift happens, there's no fair value gap. Then this happens, so this is where we could have looked for buys, but as you were able to see, we didn't get a trigger. So nothing for us to do. And at that point, we are already at premium, right? When price, well, not really. Price has reached a premium and is coming from a premium already. So it wouldn't be that ideal, but the entry will be a discount. So at least we do have that that in favor of us. But yeah, just Tuesday was a no trading day. And Wednesday was really interesting for me. Somewhat painful, but we do get some things interesting to discuss. Let me change the music because I'm not understanding what's going on. Buy sell liquidity taken immediately starts dropping lower. I don't know why so much aggression, honestly, but I don't mind it. Honestly, I do hate when there's much movement through everything that happens before New York, because that tends to ruin the New York price action. But in this case, yeah, it did happen, because as you can see, it does range to then continue lower. But yeah, let's talk about this. Why could we expect the day to be bearish? At this point, I was already very convinced that the week was going to be bearish due to the fact that we had Monday taken by sell liquidity, Tuesday just continuing lower, tiny bit of a range, aggression lower, London was bearish after taking by sell liquidity. We had already a little bit of a retracement, which definitely got up to the 50% at the very least. Let's look at it. Right there. Even this 62. Oh, and he had reacted to this order block here, which I hadn't. Well, I didn't remember. You can see how pre-New York reacts to the order block. Market shift in the 5-minute when breaking that low. Fair value gap. Trades into it. Works out. Another fair value gap in here. Trades into it. Continues to go lower. Takes some buy sell liquidity. And here's the thing. So got the 830. This, the first mistake of this week. Yeah, I would say the first mistake, because just Monday I would have not been able to trade that buy either way. Was that if you saw the video where I talked about the 20R made on 4 weeks through the 5 steps that we've been discussing for the past few days, right? I'm taking it. It's not that I've changed that or anything, but I'm taking it quite literally, right? If we get those, that means that we can look for lower time frame opportunities, right? If we get 1 and 2, we are going to be looking for lower time frame opportunities, and if we get the lower time frame opportunity, I'm going to take advantage of it, whatever happens, right? So what do we get here? We have a little bit of a range through London after the impulse, which is understandable, and then retracement, mitigation of an order block, an area that could cause price to continue to go lower for value gaps. Trend is clearly bearish. What else do we have besides that? We already understand that the weekly bias is very likely bearish, right? On the weekly forecast, we understood that price has a probability of going bearishly if we first take some buy sell liquidity from previous week and then just continues lower. And we have gotten 2 days of that basically working in our advantage, right? We have a pretty strong weekly bias, in my opinion, at this point, right, on Wednesday. So we can definitely understand why price could continue to go lower. What do we get then? We get a little bit of a reaction to the left, to the price action on the left, which is a low. Takes that, so that's a run and stops, aggression higher, fair value gap in here. I'm going to look for lower time frame opportunities, right? Could have we avoided this by understanding that the weekly is bearish, that the day is very likely bearish? Could have we expected a deeper retracement than this? Definitely, right? We could have seen something like this to then just continue lower, right? We could have gotten that. So I look for a lower time frame opportunity. We did get a lower time frame opportunity, which we will discuss in a minute. We'll make the drawings so we understand where we are. And that's pretty much it. Also, what do we have here? Price. Look at when's the open. This is the open. Open C here goes aggressively higher. What does it do? It takes buy sell liquidity, first of all, right? It takes buy sell liquidity. We have the concept of market retraction. We have the concept of power of 3, right? Opens, goes against the direction that it's actually going to go to. So basically move against the trend, manipulation, and then distribution lower, right? We had multiple reasons to understand and believe why this could have been a Judas swing. I did mention it through Telegram that this could easily be a Judas swing, but I'm gonna take advantage of it anyways. And what happens later, and the reason why I actually could have not looked for sells at first was this. We get the fair value gap on the 5 minute after taking buy-side liquidity, so we understand that this is a pretty good opportunity, but there's no market shift. There's no market shift for me in the 5 minute, right? Where's the steps? There's no 5 minute or 15 minute displacement and that market shift for me to then look for the lower time frame opportunities, right? So if the criteria isn't met, I'm not going to be looking for opportunities. I was spectating this price action because I was also looking for the buy, right? The buy does show up, works out for a bit, but then just respects this, and we do get a lower time frame entry, which we'll show in a minute, and then goes aggressively lower. Now, what is it that we have now? We have a market shift, if it allows me to write it. Have a market shift. We have a fair value gap in here, right? And a lower time frame opportunity that we will discuss. So, yeah, 1 minute. So the buy price mitigates the fair value gap, aggressively holds higher, market shift, fair value gap, even a tiny bit of an order block in here, entry in this low, this high actually. Oh yeah, this low actually. Stop loss below. What do we have? Aggression higher, mitigates this couple of lows. We definitely have equal highs here. Takes those equal highs and then immediately drops lower. Right? Stop loss is still here obviously, and that's where I'm taking. Right, this candle is what takes my stop loss because of course my stop loss was all the way down there. So in my opinion, it's a good buy, right? But if we understand that the bias is bearish, we're just not going to take advantage of this. We're not going to take this opportunity and maybe just miss out on an opportunity. And if we were wrong about the weekly bias, then we could take advantage of that bias through Thursday and Friday, right? It is what it is. So taking a loss, right, on here. And as you can see, 5 minute fair value gap, 1 minute market shift on this low. Fair value gap, trace into it, aggressively goes lower. Does come back for potential break even, in my opinion. Could have been something like that. Not entirely sure. But well, it is what it is. 5 minute fair value gap, right? Bearishly after what? Taken by sell liquidity after custom market shift. Fair value gap. The 5 minute, this move lower doesn't cause a market shift, so we are not taking advantage of this. Then we have news, so we would have not traded for 5 minutes before, right? From this point, let's actually do it like this. So 9:55 all the way up to 10:05, we're not trading. This is a time where we are not trading, right? We're avoiding the news. What do we have? Run and buy side liquidity, aggression lower, retracement, still trading within the fair value gap, right? Within the 5 minute fair value gap. I'm not expecting this high to be taken due to the fact that it took buy side liquidity, respected somewhat of an order block back here, aggression lower, counts back up, aggression lower, market shift, fair value gap, and this is the second trade that I took for the day. Now, ICT taught or discussed about, I haven't seen the risk management videos, or have I? Because it does discuss about this. Not sure. In one of the core content videos, he talks about that his recommendation when you take a loss is to the second trade. If we were to re-enter on an opportunity in the same day, it's better to take it with half risk and either just covering the loss or going for an extra R as an example. So if I took a 1% loss on this one, which I did, right? We took a -1 on this one, -1% of this one, it's the 40, -1% of that one. Then on this one, I'm risking a 0.5%. And I'm looking for 2R to cover -1%, right? Or 3R to cover -1% plus 0.5% in this case, right? Just to take something out of the market if we still believe in the opportunity or if we see that the trade is really worth it, right? That's, again, I don't really remember. It's one of the examples where he's executing a trade. I don't really remember which video. Saw it a couple of weeks ago. Yeah, weeks ago it could be. So this is exactly what I did in this one. Do we have the steps for this trade to be a trade, to be something worth? My opinion, we do, right? We have the 5-minute run stops, we have the 5-minute market shift, and we have the 5-minute fair value gap price. Trace into it. This is not something we're taking advantage of because we didn't have a market shift. Price here takes buy side. Of course, we have news. We're not taking advantage of that. But as an example, if a fair value gap was created in here and the market shift happened, this could have been the opportunity. Of course, if it happened after 10:05, because I don't trade 5 minutes before or after the news. Then this comes back up. It's still respecting this move, this leg. So I'm considering that as the, let's say, round side, buy side liquidity. Market shift, fair value gap, and this was my execution, right? Again, I went for, actually, is this it? Yeah, this is the 69 trade, which, because price started going aggressively higher and I executed it a bit higher than expected, and 112 as a stop loss. So down to this low, we have 2.63, and I closed 2R, approximately a little below this low. Yeah, 2R, that's exactly where I closed. And as you can see, we could have gone for this, would have been 2.63. But if we're expecting, if you understand the, not if you understand, if you know how structure works, basically, what are we expecting to happen when we have a clear trend? We have lower low, lower high, sorry, lower high, lower low, lower high, lower low, lower high. What should happen afterwards if we are, again, still expecting that trend to continue to work out? For that trend to continue to work out, basically, we need the lower low to show up. So that's why this could have easily been a 5.21R, right? And that means that I could have gotten out of the market this day specifically with a 4% instead of just a break-even. I'm happy with the break-even because overall I didn't end the day in a loss. And as we'll discuss, I ended the week on a break-even, basically. And but yeah, this made me question a bit this risk management rule, which makes sense because, as an example, a couple of weeks back, not a couple of weeks back, maybe either last week or the week before that one, I had a similar situation where I took a loss. Then I went for the second trade with half risk, looking to just cover the loss. And that trade covered the loss and then immediately turned against me, right? So that means that either if I didn't close the trade when I should have, that trade would have ended up in a break-even, meaning that I would have ended the day in a loss, right? So I'm not entirely unhappy with it because it makes sense to do that. You've taken a loss, you could be feeling a bit emotional, and covering that loss and just starting from scratch the next day is definitely a good way to see it. But at the same time, if you really trust your strategy, if you really have a set of instructions that work on a daily, not necessarily on a daily basis, but we see it in maybe 2 days a week, right? Then it's better to trust the risk to reward ratio to cover for the losses but in its own time, right? When we are just, how do I explain this? So if we trust the strategy, if we trust that we have a good win rate, and along with the risk to reward ratio that covers usually for the losses without much hesitation, then we don't really need a rule like that. We don't really need a rule for us to take a trade that makes a lot of sense in every way, to just cover for a loss that we've just taken, right? Because as an example, what happens now? Now I'm at break even, but what happens if I tomorrow take a loss and then the next day take another loss? I'm down 2% when if I would have taken this entire win, I'm up 4%. I took 2 losses later, I'm still up by 2%. Let's call it 1.5 due to commissions. So that's why, as an example, I came to the conclusion that that's not that strategy. That rule, I don't really see the worth for my way of trading. I trust my risk reward ratio, I trust my strategy, I trust my win rate, right? So I don't mind taking 2 losses in a day with a full risk, right? If I would have taken a loss on this one, I would have taken a -2% loss, right? On the day, of course, which is, of course, worse than ended the day in a break even. But again, if we have a strategy of a set of instructions that we tend to see trades show up one or twice a week, we can take these trades that could give us 4 or 5R, which is 4 or 5%, that then covers for the losses without any hesitations, and usually cover the losses and leave those with some profits. Right, so that's the reason why I ended up, well, what I decided to not use that rule anymore, and well, won't apply it for the next couple of times, right? I just want to say that. Really lovely day, could have ended up in a 4% profit, but it is what it is. We just discussed Wednesday, and we go on to Thursday, and Thursday was also somewhat painful for one specific reason, and it's something that I'm still struggling or debating with myself, because I can't really say for sure what I would have done with this, right? Because if I was presented with this same situation again, I'm not entirely sure if I would take the trade or not, right? So let me make a pause. I'm going to drink some water and come back. Okay, so let's just say Thursday. So I started the day by saying that we were in a range, right? We clearly were in a range where we have this low, this couple of lows just being mitigated over and over, right? We also have a couple of highs being mitigated over and over, right? I even took this as not a run by sell liquidity. And then we get session open. Session opens here, trades a bit lower, a bit higher. And what does it do? It takes all of the buy sell liquidity that we had to the left. In my opinion, it wasn't much of a run, as it barely took the buy sell liquidity. But it is what it is. It took buy sell liquidity, causes the market shift, creates fair value gap. So do we have everything that we look for? We do. That's it, right? What do we get? 2 fair value gaps. We get 3, but we'll talk about why we get 2. ICT teaches that we're looking for a run and stops that then causes displacement, market shift, and all. But let's suppose this is a run and stops, displacement, and let's leave it here. Having this price action, this is the run and stops, right? So this is the buy side liquidity. This is the market shift here under this low, market shift. And the leg that causes the market shift is where we're looking for opportunities. This is where the fair value gaps, I remember he said, order blocks, breakers, mitigation blocks, this is where we are supposed to look for those. This is where we execute. This is where we take the entries. So if a fair value gap was to be created in here, or as an example in here, we're taking advantage of it, even if it happens here, right? Pretty low and to the point. We don't care about where it's created as long as it's created in here. So this is what I've based my trading for the past few weeks, right? For the past probably a few months. So if price was to continue to go lower and ended up creating another fair value gap, maybe in here, for example, right? I'm not going to look for that opportunity. I'm not going to look for a lower time frame on that, because I expect this to act as liquidity to then trade into one of the fair value gaps that were created where they were supposed to be created, and that's where we could take the lower time frame entry. So based on what ICT teaches, again, this is where we're looking for the fair value gap to execute on. But of course, what he does is, as an example, if we have a run and stops, he starts looking already into the 1, the 2, the 3, the 4 minute for exactly this to show up. Market shift, fair value gap to be created inside of this, and that's where he executes, right? Me personally, I wait for a 5 minute to be created after run stops to then look for the lower time frame opportunities, right? Reason why in some cases you see me saying that there was a lower time frame opportunity that just didn't take advantage of, because, well, it's just doesn't happen where at the time frame that I look for it. So this is the way that I can trade it. So if not a lower time frame, but if a fair value gap was to be created outside of this area, such as this one, I'm not going to look for an opportunity on that one. Now, as we'll see on this one, price, I do kind of say that it does go further. It doesn't respect the fair value gap entirely. It does go further, but overall it does respect this high. This high is the high that creates the high of the fair value gap in this case, right? So the fair value gap, the structure of the fair value gap is respected, but it does go a little bit very further than expected. 15-minute wise, I'm pretty confident we didn't get where are we? I'm pretty confident we didn't get anything on that. No, because the this is the 5-minute fair value gap, and this is the 15, right? So the move higher actually creates the 15-minute fair value gap. So what happens when price mitigates this one? What is it that we do? Me personally, I literally said through Telegram that I'm expecting this high, that I saw the opportunity, because as you'll see when we go down into the 1 minute, we have the market shift and the fair value gaps, which price retraces back into and continues to go lower, giving us this lovely trade. But the thing is that I literally said I'm expecting this high to be taken as liquidity, or for the 15-minute fair value gap to be created, as we just saw with this high, to then price trade back into the 15-minute fair value gap and go lower, right? So that's exactly what I was waiting for, and as you can see, price just left without me. So what can we do about this? Something that I said, well, we could look into the Fibonacci, right? We could say price got down to this, so do we have price mitigating the 50%? And no, I thought it did. Oh yeah, hold on. Probably the weeks are changed, because FXCM tends to do that after the market. The weeks change. Yeah, no, it doesn't reach it by a tick. I do think I remember saying that it did, or seeing, of course, that it did. I'm not sure. We could measure it like this, which would be something like this, and definitely gets to 50, but I don't like doing that. So yeah. Let's suppose it got to 50. Now, does it get up to this area? This is the market shift. Let me actually delete this and hide this for a second so it looks a bit easier. So do we have does it get back up to the area of the leg where the market shift occurred? It definitely does, but of course we're not basing ourselves on that. We're basing ourselves on the fact that a fair value gap is created within the area for price to actually reach one of those and then give us the lower time frame opportunity, right? So in this case, price doesn't reach into them. And as I mentioned in the day, it does reach this. Let's just suppose it did, because in my opinion it did. I don't really remember if it definitely did, but I think it's just FXCM changing the candles after the market. And the lower time frame entry that showed up was this lovely entry, in my opinion, clearly as the day. This is the market shift. We also have this tiny bit of a run and buy side liquidity. Let's see if here, no. And fair value gap. Beautiful, right? This would have been the execution. Of course, we have a little bit of an issue that if we were looking for just the sell side liquidity, we don't really have a nice risk reward ratio, right? We have a 1 to a 61. But the week is bearish. The week is bearish. So why would we not go for this? Now, this as an example gives us a what? Going for that gives us 7.57. So in my opinion, is worth the target, right? We understand that price is likely to get down to those lows, maybe even those lows, right? But that's asking for too much. But in my opinion, what I tend to do is say, okay, so we have the probability to get down there, but I'm happy with 5R, right? 5R, well, 4R now is my bare minimum, right? 4R is the least that I want to get out of a trade, right? Just to keep the risk reward ratio nice, right? Also the risk reward ratio. So that means that if I see anything important, such as an example, maybe this low specifically, if I get 4 or 5R before that, I'm definitely happy with taking profits on that, because as you can see, it takes this low as liquidity and then aggressively changes direction for a bit. Of course, it just what is it that it really did? It took some buy side liquidity from the 1 minute, mitigated a 1 minute order block. We might have some 5 minute fair value gap. We'll see that in a second. I do think we had a 15 minute, yeah, because we get multiple entries here. Yeah, we'll talk about that in a second. Yeah, so this would have been the trade. on itself, I would have gone for that 4% without really caring about missing out on this, because there could have been opportunities or days where price actually takes it slow and retraces. Just to retrace, of course, I'm not saying that it's reversing from this point. I'm saying that it's retracing, and maybe in that retracement, it takes me out for a break even, right? Well, respecting maybe the order block created with my entry, or it takes even this buy side liquidity, mitigates something further, or the fair value gaps that we're looking for since the beginning, and then continues going lower, right? So you never know when the retracement is going to end or how deep is it going to be. So in my opinion, closing here would have been just fine. And as an example, in this case, it does retrace, take some buys out, respect something, continues going lower, right? So a really good day. I do think that this was a really good opportunity. And now you gotta ask yourself the question, is this trade worth it? And here's the thing. I got two ways to look into this. We can strictly follow this, right? Which we've seen works out great, right? I mean, even if we would have missed out on this one or not taken this one due to the rules or the instructions, we still would have had a Day's trade, right? Wednesday's trade, where we are still up by 4% for the week, of course. And we still have Friday ahead of us, which Friday didn't have any trades, but we'll discuss that now. So what do you do in this case? We have two opportunities. We could say A, after the 5-minute, 15-minute displacement, I think it will be better here. Any fair value gaps created after 1 and 2. Maybe we could say inside good premium and discount, right? Just to have a little bit of a better risk to reward ratio, but not risk to reward ratio. I bet a little bit of a higher probability. But here's the thing. What I'm trying to picture here is that we have the opportunity to say we are either still sticking to this, to looking for the entries exactly on the leg that causes the market shift. So that means that the 5-minute fair value gap would have been this, which price doesn't mitigate, so there's no entry for us. Or, as we've had the run stops, the 5-minute has shown the 5-minute market shift and displacement. That means that the direction theoretically is already set for us. The market has shown what it wants to do by taking the buy side liquidity and immediately market shift and displacing on the 5-minute. So that means that any opportunity that shows up for us to sell will be theoretically in favor of the trend. See what I'm trying to say here? This is a way that we could say, so we've already, this thing that happens here, this run on buy side, market shift, displacement in the 5-minute, I'm saying that this could be a way for us to set our bias for at least down to the sell side liquidity, whether it was down to this lows or down again to this one or this one, right? Also, what do we have? We have, of course, the weekly bias, the daily bias in our favor and everything. So that is one way to take it, right? We just, any single opportunity that shows up going bearish, we're going to take. Or we stick to this, right? We stick to this. And if the fair value gap shows between this low and this high in this case, we're waiting for price to trade into it, and then we look for 3, 4, and 5, which is what I'm going to be sticking, right? Now, what will happen? As an example, in the future, how can I battle this? Price does reach the 50%. Let's suppose, well, now it reaches it. Actually, yeah, by a tick. Let's suppose we have it like this. Where is the 5-minute fair value gap that it actually mitigates? It's at the 23, 25% retracement. It's too low, right? It's too low. Well, yeah, maybe 30. It is too low for us, right? So that fair value gap is a discount. I can't be selling from discount. Now, the entry or the retracement does reach the 50%. But the execution is still a discount. So from my point of view, this is actually a trade that I should have missed out on, that I should have avoided completely, because again, we are at discount. The fair value gap is at discount. The execution will be at discount. Does it reach into this area? It does, but it doesn't reach into the fair value gaps that it should have to then give us the opportunity. We're always going to try to sell on premium and buy on discount. Is that right? Yeah. So this, going back to conclusion, it's not a trade I should have taken, right? It's not a trade I should have taken. So I'm happy with what I did, honestly. Of course, I would have preferred taking it because it would have worked out, right? But if it's not within our rules, we really shouldn't say that. We really should be happy with avoiding a trade, even though it works out or not, right? Because in other cases, we could have taken a loss, right, on that one, that we would have been not happy with. We would have said, well, we didn't have the confluences to sell there because it's a discount. It didn't mitigate any 5-minute fair value gaps that is within good premium discount or within the area it should show up, right? So it's just not an entry, right? And I'm actually really happy with what I've decided. So yeah, now let's go to Friday. And Friday was actually really cool because the concepts showed up, but no entries really, except the ones that happened pretty late onto it. Oh, forgot to talk about something about yesterday, or well, Thursday. Let's go back. So this retracement here takes buys the liquidity in the 1 minute, mitigates a 15 minutes, if I remember correctly, 15-minute fair value gap that might have been above this high. Starts dropping. We could have been aggressive and say this is the market shift. So this fair value gap in here, we could have executed stop loss up here, goes aggressively lower. If we didn't count that as our market shift, this is our market shift. Fair value gap in here from this candle's low to this candle's high. That is the second entry. This is actually what I said through Telegram, the one that I would have actually taken. Stop loss, of course, above this high. Works out great. What do we have later? Aggression, even better market shift if we wanted to go for it. Third entry on the move. And all of this, again, we could have gone down to this low, which would have been definitely a really good risk-reward ratio, depending on which we executed. On this one, it would have been like that. 50 or well 5 pips of stop loss, and target was this. Well, actually, let's go for that low there. This one, 5.82R in this one. Then we have the other one, which is executing here. Stop loss here plus 4 is 56. 5.18, and this is probably the worst risk reward ratio. Well, yeah, it's 7 pips of stop loss down to this. It's still 4.67, so definitely takeable. Those are the 3 entries that could have been taken by just following the trend, right? By phase 3 for me is everything that happens when the trend has already been set. As an example, in my opinion, the trend has already been set when the first trade shows up and works out, right? You see 5-minute fair value gaps and 15-minute fair value gaps being created, traded into, and continue going lower. So at that time, the trend has been set already for the rest of the day, and just price continues to go lower. There. I don't want to get too much into that because, well, pretty long video. So, Friday. Are we pretty low? We're definitely pretty low. Look at what happened through through London. We have clearly buys of liquidity being taken from multiple areas. Goes aggressively lower, retraces, fair value gap aggressively lower, retraces, no fair value gap in that case, continues lower. Little bit of a range through pre-New York and phase 1 as it is usual, as it's usual. As an example, we have a 5-minute fair value gap here after this session opens here, trades lower, takes sell side, goes aggressively higher, right? I even looked for sells after this buy side liquidity was taken, but as I mentioned, I was mostly waiting for this. This is what I was actually interested on, right? And yeah, price takes a high and starts going aggressively lower. This is a 5-minute fair value gap. As you can see, it doesn't trade into it. Goes aggressively lower. Another 5-minute fair value gap where we could have looked for opportunities. Nothing. 5-minute fair value gap pretty low already after 10, so nothing for us to do. So did we have the steps? We definitely did. Price just didn't trade into the fair value gaps, so that means that we're missing out on step 3. Therefore, we can't really look for 4 and 5. All right, so let's look into the entries. And let's actually talk about this one. So, what does ICT teach? If we have a bias, right? If we understand the bias, let's suppose we understand that the bias is likely going to be bearish for the day or for the week, however you want to call it, and price trades above a high, that's when we go into the lower time frames, looking for the market shift to have happened, that has a fair value gap, as an example. So in this case, this is the market shift. So the fair value gap should be in this portion of the leg that causes the market shift, right? What we just discussed basically, which we do get right there, and that could have been our entry, right? So what ICT teaches, again, this is something that you should learn from him. I'm just trying to say the bare minimum of what he teaches. But basically, if we understand that the bias is bearish, we're waiting for price to trade above a high, and for the 5, the 4, the 3, the 2, or the 1 minute to cause a market shift, create a fair value gap within that, and trade into it, and that will be our trade. This trade along going down to just the range is low gives us 9R. Range is low would have been either this one or this one, right? Could have been less aggressive, go for something like this, right? Here, 8R. Could be aggressive, go all the way down to that, or it could be here. So we're talking about 11R, 11.9R, or 8R. Honestly, again, in one of these trades, as an example, if I manage to take a trade like this, when we have an 11R potential, maybe I'd allow it to run to 6, 7R, you know, or again, be a little bit more conservative, look for something close, a pretty good, per se, low that we could take now, right? And this would have been lovely, right? We're talking about 8R taking in, well, it does take a bit of time, but it's just 30 minutes. 30 minutes of price action gives us 8.23R, right? But again, this is not the way that I trade. And I wait for the 5 minutes to be created. This is probably 5 minute market shift. 5 minute fair value gap. Doesn't trade into it, right? At any point. We do have, oh, I do forget to mention. So we have, this is the first entry. This is the second. Right? This is the third. This is the fourth. And fifth, and that's pretty much it, because this one, as an example, would have failed, right? Because we would have entered in this for stop loss about this high, doesn't work, but then as you can see, it does create another opportunity, trace back into it, continues going lower. So stop loss on this one would have been above this high. Stop loss on this one, well, above this high is really aggressive, but presumably shouldn't really trade above it, but definitely would have put my stop loss either or up here or just a tiny bit higher, you know, if I'm supposed to put it there, maybe around here, and just to be a little bit safer, you know, because it's a really tight stop loss. This one, stop loss above this high. This one, stop loss above this high, or this one, whichever you feel safer on. This one above this high, again, that would have ended up in a loss. This one above this high, pretty large stop loss. And then we got this one, stop loss above this high, would have been respected as well. Now, 5 minute fair value gap doesn't trade into it, nothing for us to do. 5 minute fair value gap, this is the candle that creates it, so it doesn't mitigate it. Otherwise, this could have been a nice entry. Another 5 minute fair value gap, as you can see, trace deep into it, does create an entry. Market shift on this low, or when this low is taken as well. Fair value gap, and it does fail, in my opinion, because it trades a tiny bit above it. How much is that? Because I got 4 ticks. So trade 3, yeah, definitely. So the reason why I add 4 ticks to the sells and just 2 to the buys is because if price was to go higher by 2 ticks, I'm taken out by spreads. So I always allow it just 1 extra tick in case price wants to go a tiny bit higher. But theoretically, if the trade is really good and everything should work accordingly, well, according to what should work out, it theoretically shouldn't break the high. In this case, it does break the high by a tiny bit, but then continues to work out. But in my opinion, that means that this was not a very valid entry, and this just took us some buys out liquidity and continued lower simply, right? So again, pretty good day. This would have been a lovely entry to participate on, and as you can see through the afternoon, we got even further drops, aggressive drops, which were lovely to see, even though I wasn't inside of the trade. And you just get multiple 27 should have been 31. I actually don't think I put the stop as well last time. Yeah, well, the risk reward ratio is a bit different. Doesn't really matter. So peak on this would have been around here, 32R. of course, we don't really have a target for that, so it's not something. It's not something. How do you say it? We trade below the lows that I was looking at. Yeah, we definitely did. We don't have a valid trade, sorry, target to target all the way down to that unless we wanted to go for this, which would have been 54R. But of course, such a drop, we wouldn't really expect it to happen like that. Or we really wouldn't trade something like this. Look at that stop loss. So yeah, that is pretty much it. I mean, I come out of the week a little bit disappointed. But at the end of the day, I actually did really well, and this is why. I had on previous weeks, or maybe not previous weeks, but in the past, a week like this where I miss out on the good trades would have been a week where I finished it by -4, -3% or something like that, meaning that I missed out on the good trades and still took losses. But as an example, this week, every single trade that actually worked out, I spotted, right? Except as an example, Monday's buy, which I spotted the second buy, if I remember correctly, because it was just not at home anymore. And the 1 minute sells through Friday after the first one, right? Because I saw the first one, I said, yeah, sure, could work out, of course, to get a paper trade and everything. But I didn't see the rest of them, right? But yeah, I wasn't really interested on it. I was expecting for my interest to show up, so yeah. So what I'm trying to say here is that I feel really good about this week because I managed to follow my rules, to not take bad trades except, again, Wednesdays, which then was fixed. And what was I saying? Yeah, pretty much that. Honestly, I'm pretty happy with it, even though, again, should have finished 4% up, right? Monday's loss and Wednesday's loss and Wednesday's win. That's all that I probably would have taken, right? Because Thursday, again, I had that hesitation on whether we should trade that or not. And I ended up not trading it. And again, the conclusion that I came to was that, honestly, in my opinion, I did well on not trading it, so I'm happy with it. So week should have been 4% up, but I ended up in a break-even, and I'm really happy. Because again, on the way that I traded in the past, I would have forced a couple of opportunities on Friday or in any other day of the week, and would have ended up down by 3-4%. Which is something that I avoided, well, last week, because last week I did miss out on some opportunities, and this week as well. So that I'm really happy of. I'm not gonna lie, I'm really happy of that. And I just need to I'm just trying to think, because theoretically, if I missed out on good opportunities because of one thing or the other, I should have something to in the future not avoid them or not miss out on them, right? Thursday, we understand that is a trade that worked out, but we don't have a way to take it. Friday had trades, but not in the way that I trade. Monday had the buy that happened after 10 a.m. New York, which is the reason why I used to trade up to 11 New York. But lately I'm just living at 10 a.m. New York because I have things to do around the house, and I just say, fuck it, just let's stop trading at this point. So I did spot the trade, if I remember correctly, on Monday, the buy. The second buy I spotted, not the first one. But I think it's pretty clear to see it, right? So I don't think I should change much from that unless I want to trade up to 10:30. Maybe that could be a new rule or something like that. Tuesday had no trades. Wednesday took both of the really good opportunities in my opinion, so I'm happy about that. Analysis was on point in this week. So yeah, I mean, I had a pretty good week. Even though I didn't end up in a profit, I had a pretty good week. I'm happy about it. The only profit that I should have taken this week was taken, but closed early due to risk management rules that, again, will be changing for this week. So I'm actually really happy about it, about this week. So I hope this video was insightful. I hope this video helps you understand the way that I trade, how I try to improve and everything. Yeah, that's pretty much it. Talk to you on the next one.